discuss the entire Adani group with you. You track that one with a magnifying glass. I know you love to talk about the Adani group of stocks. So let's get a very unbiased opinion going. What is the future for Adani Power right now? We know what the court has ordered. There's a huge debt. I read 2 reports over the weekend, and they're talking about huge concerns on the balance sheet of Adani Power because the debt to equity ratio, I think, is 1:12, which is a scary number.
Good morning, Nikunj. Well, I think on the face of the balance sheet, the numbers are absolutely, I think what you have suggested is looking little more scary. However, I think let's also understand few things. The Mundra port is basically asking for the compensatory tariff, and that was denied to them. Now, as a result of which, certainly, I think the amount of income that they would have accounted for with the compensatory tariff coming on their way, which was the actual judgment up till now, that could have actually, I think, saved this investment from going down under. Currently, I think this particular investment stays written off because of the Supreme Court order coming against the group and the company. As far as I think that part of the activity is concerned, I think that investment is already impaired, that investment is already gone, the numbers are already available to be seen. My reading says that I think that is one aspect of it, and I think the company will have to go for the restructuring of the balance sheet. That's what I look at it. What would be the best way to restructure the balance sheet? Additional capital infusion, how exactly I think they get into it, I think that is something which we'll have to wait for the details to come out from the company. But having said that, I think that there is a way out to basically get out of it by way of a recapitalization, and I think we'll have to await for more details on that aspect.
Okay, so are you saying that at 320 Adani Port is a buy?
Well, Adani Port remains, I think, a distinctly different story at this point of time. Fortunately, I think most of the companies are independently operating now. There may be some issues about the share plate. There may be some issues about corporate guarantee, which I am not totally aware about on a company-to-company basis. But the fact remains that I think Adani Port on a standalone merits, I think, is looking an extremely attractive company. On one side, you have got the ports in the Western India. They have also acquired ports in the Eastern India and the Southern India. So ultimately, I think this entire networking of the ports and shipment of goods and goods, particularly cargoes, I think that is where the company is likely to show relatively higher volumes. We are also observing that in some of the ports they are likely to see the better yield on the cargo handling. So Adani Port remains, I think, a distinctly strong fundamental story as far as I think the outlook is concerned. And I think the current correction in the price because of the order going against the Adani Power in the Adani Port's price, I think could be possibly seen as a good opportunity for investments.
Yeah, indeed. Siki, you've been tracking this group closely. Besides the bounce that one saw yesterday in Adani Enterprises, what about the other group stocks, Adani Power, Adani Ports? Are they still to be shorted?
Well, I think the weakness that we have been seeing recently in the group stocks, particularly Adani Power, has been news-led after that Supreme Court verdict. And I think the cross-holding and the need for funding Adani Ports tales of woes, Adani Power's tales of woes now would fall upon the shoulders largely of Adani Port is what is dragging that stock down. The fact is that Adani Port had moved up pretty decently, but then when it hit those highs around 340, 350 in sometime last week or slightly before that, it had actually risen to the levels of the former swing highs. And the entire move now appeared to be a little bit of a corrective move. So I think there has to be a little bit of retracement. And this news is definitely not going to help the trends of Adani Ports for a while. So while Adani Port might have its own specific predictions, I think currently the market is going to view the relationship with Adani Power and the pressure that the recent development is going to bring upon the stock, and that is what is telling on the trends currently. And these trends appear that they may have room till all the way till about 290 before you can see some value buying, re-emerge in that counter. So I think for now I would look at Adani Ports with somewhat of a negative mindset and waiting for sub 300 levels before I would take a relook at it. As far as Adani Enterprise is concerned, the news keeps blowing hot and cold in this, and Australia is on, Australia is not on, and so on. But then the trend has become slightly better. So I think in the price range of 115 to 130 is where I would see it. A much better trend seems to be there in Adani Transmission, which is one of the stocks also listed from that space, and I think at lower level Adani Transmission could also be a stock that one could take a look at from within the spec.
Now there's an interesting data on IOC which I just hit my mailbox. IOC has entered Nifty 50 and it was one of the most preferred stock by mutual fund managers in the month of March. The net buying by 15 funds was evident in IOC. Some of them could be index funds as well. But the fact that the commitment level towards IOC has increased, that just tells you that there could be an arbitrage, maybe at higher levels, BPCL, which is expensive, that's moving out and IOC is making way. Hemang, is there merit in buying IOC, not BPCL or HPCL? Frankly, IOC both has a huge inherent advantage, which is that they have size and they have reach, and the refining capacity also has been locked up. That's not the case for HPCL and BPCL, and if I look at the relative valuations also, IOC is very cheap.
Absolutely, Nikunj. In fact, IOC has been about 15 to 20% cheaper in terms of valuations compared to BPCL and to some extent with HPCL also. I think there are two things which are happening for IOC. One is that Paradeep refinery has got commissioned very recently, and since it's a new refinery, I think the overall refining margins would be extremely better than most of the other old refineries that the other companies have. Apart from that, we are seeing that because of the kind of autonomy which is there, there is no really reason for such a huge discount between an HPCL, BPCL and IOC. In fact, IOC in terms of distribution, in terms of the entire asset network of pipeline that they have, should be trading at par, maybe at a slight premium, because of there is no real other reason to quote at a discount. So I think because of that, and maybe because of MSCI rebalancing, where there is going to be some kind of an increase in the weight of IOC, that is what is driving up the price. We have been liking the stock for a while, and we have a price target of about 460, 470 for the stock for 12 months.
Deven, how are you mapping the moves within the metals pack? Because the street is still divided, saying that maybe metals as a sector has not quite bottomed out, although the stock prices of late are ebbing off a wee bit. Do you sense that perhaps there's still some more upside left in the sector, or do you think those days are gone?
Well, Aisha, I think the metals probably as a pack looks, I think, quite an interesting play now on. India as a story, I think, is certainly consuming the maximum amount of the production. So domestic production of Indian companies, I think, is certainly not to be doubted. On the international front, I think some of the major issues pertaining to the crude oil prices, I think they are now under control. So obviously the metal prices are not remaining volatile, they are remaining quite under control. So that is once again giving comfort as far as the profitability aspect is concerned of the metal companies. On the other side, China is showing a slight revival path, and as a result of it, the metal prices are likely to remain steady. Of course, I think they have closed down some of the metal capacities as well. So metal prices are likely to remain steady. And I think if America is also chipping into the infrastructure-led development growth, I think in the economy, probably I think we are not likely to see the fall in the metal prices which one has seen up till now. At the same time, there may not be dramatic rise in the metal prices because the crude oil prices are remaining steady. Given that scenario, my reading says that I think most of the commodity metal prices will remain steady to firm in coming period. And as a result of which, I think it should have a positive influence in the working of the companies. I am distinctly positive and bullish about the Indian metal space per se, because they have got the capacities and that is fully utilized currently. which is giving them a larger amount of thrust. And I see this scenario continuing for at least next 3 to 5 years. Given the kind of space in which the metal companies are, probably you should be seeing a larger growth coming from the metal as a commodity space. So maybe I think market corrections or some kind of overhang situation may help you in adding the stocks and respective stocks into the portfolio. We particularly like non-ferrous space, and that's where I think we believe that the growth could be relatively higher.
Okay, the pre-open rates, and let's see which way the